Welcome back, guys, to Christian Traders FX. Without wasting any time, let me get down to today's topic, which is breaking down of change of character and break of structure, which is BOS, and change of character, Choch, something like that. But yeah, let's get to it. I'll be dealing with bearish momentum to bullish momentum. So we will do bullish momentum to bearish momentum in the next video. Yeah, so okay, guys, what is bearish momentum? Bearish momentum is when sellers are in control, when the market is going low, down, exactly like what is going on here, you see. And then until buyers come and take control from sellers and the market create a change of character, then the market start creating higher high and higher low, higher high and higher low. And when the market is moving in a bearish momentum, it creates lower low, lower high, lower low, lower high, lower low, lower high, and lower low, and lower high, and a lower low. You see, I hope you see that. So let's get into how we can use and how we can identify a break of structure. This is how a break of structure is created. It's when a lower low, in this bearish scenario, it's when a lower low gets broken and a protected lower high, it's left just like that without being violated. I hope you get me. Then again, you see this lower low try to push back, which is called a correction, tries to do a correction here, then comes back, break this low. That's where we call that a break of structure. Same process again, appeared, break of structure. Let me move it a little bit. Same process, appeared again. This is a valid break of structure. And a break of structure, by the way, before I forget, I will also show you in a real chart. A break of structure is only valid when a candlestick has closed below this level, below the lower low or the lower high. But since we are talking we are using a bearish momentum, it's below here. When a candle closes below here, it becomes a valid BOS. So this is where change of character comes in. When price is changing from bearish to bullish, it means sellers are no longer in control. The buyers gets to get into control. And here, if you can check nicely, this was my lower low and this was my lower high. Every lower high, when a lower low is created and we left a lower high up there, it is a protected high. You understand? It is a protected high. Why? Because if the protected high is violated, it means liquidity swept is being swept or change of character. I hope you understand me there. Liquidity swept or change of character. But in this case, it was a change of character. So how can we use these break of structure and a change of character to our advantage? We use our Fibonacci, place it to the lower low, to the higher high which is created, and place it like this. And then we wait for price to come to these areas. Then we place our buys, put our stop loss here or here or here. We can target any high that is looking perfect, or any high, but I prefer to put it in the closest high, which is a much safer way. I will have to put it here, my take profit, which I was going to use this put my longs here, my stop loss below here, and my take profit here. Let's remove this, and boom, I was going to take my profit and go home with some profit. Okay, I hope you saw that. So let's dive into real chart example in a 4-hour time frame. Let's start from here. Let's start from there. As you can see, this was the higher low. I've used the wrong tool. This was the higher low, higher high. No man, not higher low, not higher. Sorry about that. This was my higher high, then lower low. As you can see, this was swept. Then this was my higher low, lower low, higher low, lower low. You see that? Yes, you can see that. Let me identify break of structure now. Since this was our lower low, this was a break of structure and a valid one. This was a break of structure and a valid one. Why is it valid? Because the candlestick has closed below here. Few pips, 2-3 pips, it's enough. Yeah, like these ones. I hope you get me. And here there was also a smaller time, a small BOS. I hope it's a 1-hour time frame break of structure. So as you can see, when the price arrived to these areas, and there was a shift because it didn't continue moving downwards. But there was a shift. When price reached here, a shift took place here. Market started forming higher highs, and then it came and took liquidity here, and then boom, started forming higher highs and higher low, higher high and higher low, higher high and higher low. Yes, I forgot to make full screen, but no problem, because you guys have seen what I just revealed. So where is our change of character here? Our change of character, we can zoom in the lower time frame, which is the 1 hour. But 1 hour is also a bigger time frame. 1 hour, 4 hour daily. This is our most powerful time frame ever. As you can see, it's a valid break of structure. So this becomes our change of character. Let me spot it. To spot a change of character in a real chart, you see this lower low, you go up like this. You go up like this and mark this area. The highest area there, it's your point whereby it's going to be a change of character. So in this case, is this one. Change of character spotted. How was I going to profit? Back to the 4 hour. Take my Fibonacci, mark the lowest and the highest, and go to the right hand side. Wait for the price to come react to the 79 and 61, between 79 and 61, no, below 50%, which is in the discount, because above here where it's red or pink, but it's red light, it's premium. Then here where it's green and greener and green, it's discount. We buy in discount, we sell in premium. So yeah, I will talk about that in the next video. So I was going to open my longs here immediately when it touched here, and target here for a short, or even, let me remove this, or even up. So yeah, As I was saying, guys, this is where I will open my trades, and I will target here, or I can also target here. This will be my second TP, as you can see, and also this can be my third TP, and also it can be my third TP. So you can choose which one do you want, depending on the previous charts, how the price was moving. You can spot anywhere you want and make it your TP, but making it short makes it easy for you to just get in and out fast. But I can prefer this one, yeah. You can go all in, full margin, big lot size, depending on your account size. But yeah, don't forget risk and reward ratio. Yeah, because it's very important to stop loss. You can put below here, just in case. Of course, sometimes when there's news, you'll find out the price will just come here and whip a little bit, then continue to move to the upside, which we call it stop loss hunting. So thank you, guys. Yeah, so don't forget to like, subscribe, and leave a comment in the comment section. Tell me what you think. Sharp.